I think it's time to make a start, John.
I reckon.
Okay. Well, good morning, everyone that's tuned in. On behalf of Rural Co-Water, I'd like to welcome you all here for our Goulburn Water Markets Report. I'm Shani Webb from the Kahuna District. I am accompanied today by John Armstrong. John's in the Mildura office, and unfortunately, David Barthold, who was supposed to be helping present this presentation's fallen sick, so we wish him a speedy recovery, and John has stepped up to take his place. Also today, I'd like to welcome Andrew Shields from Goulburn Murray Water. Andrew is the River Operations Manager, and he's going to help with the presentation in regard the outlook for next season. Thanks, John. So what will we cover today? Today we hope to give you some insights into this season's water trading and pricing. I'll be running through that with you. Then after I've spoken, John will come up and take over, and he will talk on the Commonwealth buyback plans, the basin plan, give you an update on where that's up to and the timelines expected with those programs. Andrew will follow with his 2026-27 outlook summary that we're needing to know about going into next season. We'll wrap up with a summary and then have time for some questions afterwards. So thank you, John. So the main question everyone's asking is, why are we on 81% allocation at the moment? Well, the big factor is the storage, where we get our water from. So on this graph here, you can still see that Eildon storage levels are currently in the vicinity of 41%. So this time last year, it was on 61%. So we're down 20% just as a comparison to that. This 10-year graph for Eildon shows you that the last time our storage levels were similar to our current levels was back in the 2019-20 season. Now, keep that in mind because there are trends throughout this presentation that compare back to that era as well. So we've started the season with some carryover water, and this graph's full of information to let you know why our price is where it is. So looking at the temporary allocation and price trends on here, you can see the blue columns indicate the volume traded. Immediately from that, you can see that September and October this season were the highest trading months with just over 45,000 megalitres of water. The next highest was December. So in comparison to that, the orange dotted line is a volume weighted average price. Now this has come from the Vic Water Register. So you can see as that darts across the screen, the price has peaked out in about January, and the volume's not that high there. So there's a bit of a comparison that perhaps some of the irrigators couldn't afford water at that price, just over $400 a meg for temp. So the demand or the amount traded was lower. Now, other information that's important on this graph, the green dotted line there near August, the vertical line, that indicates when the low risk of spill was declared. So on the 11th of August this season, the low risk of spill was declared. The low risk of spills declared when the chance or the percentage of Eildon spilling is 10% or below. So usually in a drier season, the low risk of spills declared sooner. So for that to happen in August, it was already an indication that this season was looking drier and the storage levels were not as high as they'd been in other years. The red dotted line over in April, that indicates the 81% allocation time frame there that was allocated to us on the 1st of April. So with this peak of the trades in September, October and December, there's also a bit of a correlation there with the IVT openings. So the IVT is the inter-valley trade from the Goulburn system into the Murray system. So with the new regulations that have been in place for the last few years, the IVT only opens in July, October and December. So you can see there that may be a bit of a correlation with that high demand of trade there. So in July, there was 99,700 megalitres of water traded from the Goulburn system into the Murray system. So that's got to have some impact on the Goulburn system. Then in October, we had 31,500 megalitres traded out of the Goulburn system. And in December, there was 14,000 megalitres traded out. But bear in mind, coming into this season, we had carryover of 429,000 megalitres. So that was a huge amount of water brought into the season by Goulburn private irrigators. That wasn't corporates or environmental use. That was carryover from private irrigators. So that's helped boost the resources that were available in this season for the Goulburn users. Next slide, please, John. Okay, we'll move now from the temporary water markets to the permanent entitlement markets. So on this graph, you've got years rather than months. So the blue columns indicate the high reliability volumes traded, and the green columns indicate the low reliability volumes traded. So again, instantly you can see the peak times were 18-19 season and the 24-25 season. The red line that runs across the top is the volume weighted average price. And again, this has been sourced from the Vic Water Register. So if you have a look at the prices that have peaked for the high reliability, you can look at 2019-20 and the volumes traded is a bit lower, obviously because of the price and affordability. 24-25, we've got a high volume of high reliability traded and fairly high prices. Now, we feel that some of that is the Commonwealth purchases dominating the market. If you look at the 25-26 season, not quite so much even, and again, this could be a spin-off of that water being purchased by the Commonwealth and taken out of the source pool. When you look at the high reliability prices, there's two prices. There's the wet price and the dry price for high reliability water. So the wet price is when temporary allocations included with a high reliability purchase, and a dry price is when there is no allocation included. The blue line that runs across the bottom is the low reliability price. Now you can see that's been trending up a bit as well. Next slide, please, John. So other than temporary water and permanent water in the markets, the next factor to discuss is the permanent entitlement lease market. So this is another option that people can use to secure their water needs in any season. Instantly, you can see the green line across the top is the high reliability lease prices. The peak times there, or the peak prices again, is that 2021 season. And that's, again, remember that was a drier season when allocations were 80%, similar to what they are now. So leasing prices were quite high there at $280 a meg. If you look over to 2025-26, where we are now, the prices are in the vicinity of that $220 mark, but not a lot have been traded lately. And part of that is caution of next season's allocations starting off very, very low. So people are a bit cautious about buying a lease into next season, worrying that they won't get the full volume delivered to them because of the smaller allocation. We have noted across the last few years that there's been a diversification of buyers too that are moving into the lease market. Earlier on, it was mainly corporates that were leasing water, but now we see even the smaller irrigators are trying to take themselves away from being as vulnerable to the temporary market and not have all their eggs in one basket. Some are looking at forward markets and some are looking at this type of lease market. It also helps with their budgeting moving forward into the new financial season. And then another factor to consider here, again, is the drop-off is perhaps another spin-off from the consequence of the Commonwealth purchases and the amount of water available in our system for leasing. The low reliability, sorry, that's okay, we'll move. The low reliability prices run along the bottom, and at the moment you can see that's around that $25 mark. Thanks, John. Sorry about that. So this graph, there's two graphs here, of course, that give you quite a bit of information. I'd like to go, because we've talked about leases, look at the graph on the right-hand side, and that's the forward allocation market. So that's another option that people can engage in to secure up a supply of water into a following season. Instantly, you can see on here, we've got the volume of water traded in a forward. So a forward is when you purchase the water one season and it gets delivered in the next. So the big blue columns indicate the amount of water, the volume of water that's been delivered. If you look at the 25-26 season there, which is the highest volume, approximately 40,000 megalitres, that would have been water that was purchased as a forward last season, and that's been delivered to the irrigators this season. And again, look at the red line is the price per megalitre. Again, volume weighted average price from the Vic Water Register. So back in 2021, you can see the price was quite high and the volumes traded quite low. So as we've gone through the seasons, the option of forward seems to have picked up and more people are going with that option. When we're in the 23-24 season, there you can see a reasonable amount of water was traded as a forward and the price wasn't that high. That's usually when there's good allocation and people have water up their sleeve. They don't look to these options so much as in the dry season as we are now. The graph on the left, the carryover capacity market graph, this is another option that people are also using to help supply water into the next season. So here you can notice the low reliability is the orange line. And the reason the low reliability is more popular because that's the safest option to carry water from one season to the next. So again, you can see the peak prices there are in that 22-24 season. And again, that's when people had plenty of allocation, plenty of water up their sleeve. Prices weren't so expensive for temp water and they could afford to pay that $70 to $90 per meg for a parking price. The high reliability runs along the bottom of the graph, and that's in the blue line. And high reliability is more vulnerable because there's more risk of that water going to spill, and people who park on high don't get that back until that low risk of spill is declared. Hence, the low reliability being more popular. You can also see from last season to this season how that's dropped off quite a bit. Again, wondering if that's a bit of a consequence of the Commonwealth buybacks. The high reliability, you can see there, it's 25-26, it is starting to make traction. Now, one reason that might be is because we know that we're looking into a dry season next year. We're expecting that the low risk of spill might be declared quite soon. Thank you, John. Okay, this graph here is just a basic summary of comparisons. So along the bottom, you've got our current season, the 25-26 season, and you can see that there was currently 422 gigalitres of water. So that's water that we haven't finished the season yet. So that's water that may reduce in volume before the end of this season, and that will be water that's carried forward into next season as carryover capacity. Now, it's only private irrigator water. It does not include environmental water or water corporations. So bear that in mind. But if you compare that to the bar above, that was last season, we had 430 gigalitres of water. So that was a complete year. And that's what came into this season. So if we're going forward now and having to consider next season, The basic picture here is that we're going to have less water this season by the end of irrigation. Still got a couple of weeks to go. So at the end of this season, there'll be less water available going into next season than what we had at the start of this season. Okay, thank you, John. Now, I've just covered off on the insights. I hope that's been valuable. John's going to share his information with you on the Commonwealth purchases and the basic plan, and then we'll go from there. Thank you.
Thanks, Shani, and thanks everyone for joining us today for this webinar. I hope that you get something useful out of it. And again, apologies to everyone who was hoping to get David Barthold now. You got stuck with me, so apologies for that. We're just covering off on what the Commonwealth has been doing in the market, particularly over the last 2 years since there was the change to the Water Act. And the Commonwealth has been back in the market recovering more water through a few different programs. So on the screen now, you've seen the bar graph, and this has been around for a little while. So originally, the original target under the Basin Plan was for 2,750 gig, and that was made up of 2,075 gigalitres under Bridging the Gap, and the Commonwealth completed most of that, not quite finished it, but it's completed most of that prior to the current round of buybacks. There's the 70 gigalitres of Northern Basin Toolkit measures. If you are up for an interesting bedtime read, if you can't sleep and have insomnia or something, the Inspector General for Water Compliance has just released a very detailed report into that Northern Basin Toolkit that could be an interesting read for you. And there's the 605 of Sustainable Diversion Limit Adjustment Mechanism measures, and they are projects that are meant to deliver water savings to the basin to be delivered by the states. And the Murray-Darling Basin Authority will have to reconcile them over the next 6 to 9 months just to see where all those projects are up to. And the main one that we're going to talk about today is the 450 gigalitres on the end. That's made up of predominantly the Restoring Our Rivers buybacks. So what we've seen in 2024, the government originally came to the Southern Basin, and the Goulburn was excluded in the original tender process to start recovering water towards that 450 gig total. And their original target was for 70 gig from private irrigators and 30 gig from corporates. The Minister very quickly increased the target from corporates, from bigger licence holders. And what we then saw, once the original approach to market shut, we saw EOI 1, which is really what concerns Goulburn irrigators in this space, open. And that's where Goulburn irrigators were able to participate, or licence holders were able to participate in the buyback through an EOI process and then a response for tender from the Commonwealth. And in that space, under EOI 1, we've seen about 8 gigalitres recovered so far. That's either on licences or has been agreed or contracted by the Commonwealth. And that includes water in the Goulburn and across other valleys that were excluded under that, and other areas that were excluded under the original approach to market. And the other one that they are actively in at the minute is EOI 2, which is large portfolios of water. So that's for licence holders who have 20 gig or more that they can contract to the Commonwealth in one turn. So to date, and in the numbers published by the Commonwealth at the end of December, they've recovered, and that's either registered on their licence, contracted or agreed to be contracted, 221.2 gigalitres across the basin. And their plan is to have a further 200 gigalitres recovered by the end of this year. So their goal is to be at least 400 gigalitres by the end of 2026, which really will limit their participation in the market under this program, Restoring Our Rivers, going forward. Now, there may be some other needs to participate, but the government haven't been clear or haven't come to market about that yet. But what we know from what the Commonwealth have published is that based on what they had previously recovered under the Bridging the Gap and what they've recovered so far under Restoring Our Rivers, the Commonwealth now hold approximately 343 gigalitres of Goulburn high reliability. They hold about 51 gigalitres of Goulburn low, and they hold about a bit over 3 gig of Loddon high, and about 500 megs of Loddon low. So that seems like a large number. As a percentage, it's about 32% of Goulburn high reliability entitlement on issue is now owned by the Commonwealth. And just for perspective, in the Murray, above choke, they own about 35% of entitlement on issue. And below choke, they have about 29%. So it's in the same ballpark space as what they own in the Murray in Victoria. Well, that's in the Murray combined, sorry, not just in Victoria. So we see them participating there to continue to buy back. And we know that so under EOI 1, I think I spoke about this, they've recovered 8 gig so far under EOI 1. And under EOI 2, they've recovered about 130.4 gigalitres so far. The market expectation, and this obviously hasn't been, this hasn't been confirmed by Commonwealth, but the market expectation is that that further 200 gig they expect to be recovered this year will predominantly be made up of parcels from those EOI 2 sellers. The sellers with large volumes to contribute are likely to make up the bulk of that 200 gig the Commonwealth looks to recover this year. The other Commonwealth buyback participation in the market at the moment is the Aboriginal Water Entitlement Program. And that's different in that it's $100 million for surface water entitlements across the basin. So it's across the whole basin. The big difference between this program and Restoring Our Rivers that we just talked about is the Restoring Our Rivers water is coming off out of the consumptive pool and going into the Commonwealth environmental holder, either on their held environmental water licence or their special environmental water holdings. Whereas this water will stay in the consumptive pool. So the water bought under the AWEP program will stay in the consumptive pool, and it's designed to support cultural, economic, spiritual and environmental outcomes. And what that might mean is that the Indigenous groups that are in charge of managing different parcels of water in different areas of the river, they may decide to use their water to supplement environmental watering in an area, in working in cooperation with either the Victorian Environmental Water Holder or the Commonwealth Environmental Water Holder, or they may choose to sell allocation on the market to support the economic development of their community. That's probably the most promising thing about the AWEP program is that water will stay in the consumptive pool. To date, the Commonwealth have recovered 16.5 gig under this program and spent, of that 100 million, they've spent a bit over 60 million. So there's still a little bit left to recover there. And a little bit of money left to spend, specifically in your part of the world, in the Goulburn and Broken valleys, they have recovered 2,202 megalitres. So it is a portion of it, and it is a fair chunk of water still to have come out of your valley, but the good news is that water will remain in the consumptive pool. So what does this mean in the short and longer term going forward? Obviously, we've just talked about how much water the Commonwealth now holds, and that's water that is out of the consumptive pool. So I think this year we've already started to see a little bit of that impact, and I think we'll start to see more of it going forward. As Shani mentioned, we've seen carryover pricing and space on low reliability become a bit harder to source, both in Goulburn and in the Murray. And I think we've seen this with those low parcels, particularly, that have been sold in the Commonwealth. That's a reduction of that low reliability carryover space available. There's 33% of entitlement is now held by the Commonwealth. So that's 33% of total available allocation from entitlement that's no longer available to the market. So in wet years, what does that mean in terms of water availability? Well, in wet years, everything should be okay because everyone will get 100% allocation and there'll be plenty of water to go around. What we'll start to see as Commonwealth water ownership increases is that in those average years, so normal to average years, there will be essentially a threat of deficit in those years, right? We'll cut very close to available water to meet needs. And this will push prices up. As we've seen, historically it's been those drier years that we've seen higher allocation prices. There is a chance that with what the Commonwealth has purchased, that could just set a new floor price in those average years and just push that average price up a little bit. And what we'll see in drier years is obviously less allocation available to market. There'll be less space available to carry water over, and less allocation available into the market in those dry years. And that's not just in Goulburn, but that's what impact does that ownership then have with the connected system? Is there more demand on the IVT to get into Murray in dry years because there is less available in both systems? And the market sentiment around that, right? There is, there is concern from growers that the impact that these buybacks will have on their availability, on their ability to source water that they need at an affordable price. So it's just something to be aware of as we go forward. The Commonwealth will probably not have too much more buyback activity for the remainder of this year outside of recovering that 200 gig that they've already said. But we just don't know what they're going to do in the future, especially around the SIDLAM. So that 605 SIDLAM, if there's any shortfall around that, the government will potentially look to recover something there, but they haven't been clear on how they would expect to do that yet. With that, I hope that's given you some insight to where the buybacks are up to at the moment.
Wonderful. Thank you, John, for sharing that knowledge. Okay, now that we're on to the third part of the presentation, I'd like to welcome Andrew Shields from Goulburn Murray Water. And thank you, Andrew. We'll hand over to you for your outlook into the season next, in the coming season. Thank you.
Right. Thanks, Shani, and thanks for the opportunity to provide the resource update today. I'll just start with a summary of the inflows to the major storages from July last year to March this year. So we've got inflows there across all those major storages. And as you can see, most of the inflows have been below average and most close to half of the long-term average or below. If we look at the inflows into the western storages, so at Epilock, Cancurran, Tullaroop, they've been closer to 10% of the long-term average, so certainly on the drier end of the spectrum. The last column we've got there is the what we call the probability of exceedance. So this is a measure of the chance of getting a higher inflow. So, for example, in the Goulburn system at Lake Eildon, 553 gigalitres of inflow has a probability of exceedance of 85%. This means in 85 years in 100, we'd expect to get more inflow to Lake Eildon, and in 15 years in 100, we'd expect to get less. So not on the real 2006-7 minimum inflows that we saw that year, but certainly on the low end of the spectrum. Also, just to put these inflows into context, in the Goulburn system, to meet all of our system operating needs, so the water we need to operate the river system, the channel network, storage, evaporation, and allocate 100% to our high reliability water shares, we need about 1,600 gigalitres to do that. So if we look at the inflows that we've seen to Lake Eildon and into Goulburn Weir, so that's the inflows that we receive between Eildon and Goulburn Weir. It's quite a large proportion of the catchment. This season, those inflows have been slightly higher than 900 gigalitres. So Shani mentioned that the storage levels down at Eildon. We've had some water in reserve in previous years, but we're only getting 900 gigs or so of inflow. We're a fair way short of that 1,600 gigs that we need to fully allocate in a year without having anything in reserve from the previous year. So it's a key factor in why our seasonal determinations this year are only at 81%. So we go to the next one, please, John. So this slide shows the cumulative inflows per month. So just adding those up by month for Lake Eildon. So we've got what the inflows were in 24-25 in the purple bars and in the 25-26 season in the blue bars. And then we've got the comparison of what those inflows are under the wet, average, dry, and extreme dry scenarios. They're the ones that we use in our outlooks. So we've been tracking slightly better than what we received last year, but they've both been fairly close to that dry inflow scenario. And if you look at the sort of volumes that we get under the dry scenario compared to the average scenario, it's sort of around that 600 odd gigalitres that we're not getting or when we're under that dry scenario compared to the average. So it's some fairly significant volumes, or there's difference between those two scenarios. If you go to the next one, please, John. This is the similar information at Hume compared to what we just saw at Eildon. Again, tracking quite close to the dry scenario this year, and just slightly better than what those inflows were last year. And the key to what we've seen for water availability across all of our catchments has been, this is sort of, we've had two very dry years in a row, sort of following that dry scenario. So that's where we start to see those reserves that we've established through those wetter years being utilised to make those allocations that we have this year, and just puts us in the position where we don't have as much available, which will play out when we get into the outlooks in a couple of slides. So we go to the next one, please, John. So if we look at what's ahead. The Bureau's outlooks for May to July and also the winter months both show that the chances of exceeding the median rainfall is less than 10%. So it's indicated by those brown and yellow colours. So yeah, certainly indicating that dry conditions are favoured over that period of time. So we'll continue to keep an eye on how the climate drivers influence these and how they develop over the next few months, and see what rain we receive, because it's really important over the next few months to get some rainfall over those catchment areas to wet the catchment up, because it's starting from a fairly dry position, to start generating some inflows over that winter spring, which is the time when we get most of that water into our storages. Let's go to the next one. Yeah, thanks, John. So on the 1st of April, we updated the seasonal determination outlooks for the 26-27 season, and we'll also be updating these again on the 15th of May. As I sort of touched on earlier, as we finished on 81% in the Goulburn system this season, the reserves that we have for the 26-27 season, those reserves that we established between the seasonal determinations of 30 and 50%. So it's the early season reserve. So we've got water to operate the system in the following season. So it's very different to what we've seen in the last few years, where we've had additional reserves when we've been able to get to 100%. Because once we get to 100%, that's when we keep building those reserves for allocations in the following season. If we go under the average scenarios there, we're probably getting to 100% in late spring, early summer. But as highlighted by that dry scenario there, if we have similar inflows to what we've had in the 25-26 season, those allocations are probably only getting to around that 44% by February. And the other key part of that is that we don't fully have that reserve established for the following season. So it's probably only 3/4 of that early season reserve. So looking into 27-28, there'll be less water available in that season. If we skip to the next one, John, we look into the Murray system. Come up there. Yep. So again, with the Murray system, we're able to reach 100% of high reliability watersheds in November, which meant that we've been able to establish, excuse me, some reserves for the 26-27 season, which is this is sort of why the Murrays are probably a little bit higher. We look at the starting allocations there under those dry scenarios. They're a little bit higher than what they were in the Goulburn system. And again, like the Goulburn, if we get average conditions, we're likely to see those seasonal determinations improve relatively quickly through winter and spring and reach 100%. But under a repeat of the inflows of 25-26, we're likely to be in that sort of 70-75% range by the middle of February. Again, different to what we've seen in previous years in the Murray system, 70-75% seasonal determination would mean that we'd only have the early season reserve in place for 27-28. So certainly keeping that in focus as well. I'll get the next one, please, John. Shani mentioned about the risk of spill there as well. With the storage levels at Hume, Dartmouth, and Eppalock lower than what they've been in recent years, the expected risk of spill at the start of the year is lower than what we've seen in the last few years as well. So the Murray's sitting at around 35%. In the Goulburn, we'll be fairly close to that 10% threshold needed to make a low risk of spill declaration early in the season. And the Campaspe's about 30% as well. Might be sort of a little bit odd that the Goulburn's a little bit lower than the Murray and the Campaspe. That's just a feature of the Hume and Eppalock under those wetter conditions can tend to fill more readily. Just if we get closer to average or above, we're probably filling both of those storages where we're at Eildon, where we're still not getting to that point. If we just go to the next one, John, thank you. So just a couple of those key considerations for the Goulburn this year. I've mentioned that we've got less water in reserve for those seasonal determinations next year. Having that stored water has been key for having that high water availability in recent years, and we're heavily dependent on what inflows we receive through winter and spring. So really, the next sort of 6 to 8 months will really shape where water availability heads next year. The other part that's sort of been mentioned a couple of times already around the trade opportunities out of the Goulburn system. So there'll be some opening opportunities on the 1st of July with further volumes available in mid-October and mid-December. Depending on the volumes allocated to the historically traded entitlements and water use in Turrumbry will really determine what the October and December opportunities are. But there's some really good information on the Water Register website. So there's some worked examples of how these trade opportunities are determined and the likely volume. So I encourage everyone to have a look there if you'd be keen to understand how those work. Just go to the next one, please, John. Thanks. Just for clarity, we've spoken about how water availability will be a bit lower going into next year, but we've got water set aside for the GMID, all the channel networks to operate as normal through the 26-27 water year. So carryovers certainly deliverable across all of the network. The rivers will operate at lower levels, but as usual, we'll be able to deliver carryover there where possible. We'll look to try and be as efficient as we can, as we always do, but there'll be a few other things that we're looking at doing. Places like Warringah Basin, we'll be trying to operate that at a lower level to minimise our evaporation rates there, but still being able to maintain the capacity we need there to meet demands along the Warringah Western Channel. And as I mentioned a couple of times there when we're talking through the outlooks, it was just certainly keeping an eye on what 27-28 might look like if we have a third dry year in a row, where those allocations again will be lower than 100% across the big systems, and those low reserves for next year will mean we'll just need to keep monitoring what happens across the board there. And I think that's all.
Wonderful. Thanks, Andrew.
Thanks.
That was really informative. Give people a really good base to make some informed decisions going forward. Thank you. John, would you like to give
Thanks,
the summary?
Shani. Yeah, and thanks, Andrew, for that pretty thorough and eye-opening outlook into next year. And it's something that we all have to be considering as we enter into next year, and as Andrew said there at the end, right, just to also think about that year after, start to think about 27-28. So next year, opening allocation and outlook, as Andrew said, if the scenario stays dry, the expectation is that we'll open at that 0% in Goulburn of allocation, but a little bit higher in Murray just because of the way storages are. Well, the risk of spill, the current risk is low, as Andrew said. It's 10%. I think there's an opportunity maybe to ask Andrew a question coming up. What does that mean about when that declaration will be? And I'll just plug it right now. If you do have any questions, you can jump in the Q&A section of the meeting. Leave your question there. We've had a few sent in that we'll deal with at the end of the meeting. But if you do have a question, feel free to just put it in the question and answer section. So what does this mean in Goulburn? So we have low opening allocation. The risk of spill is low. We are seeing other pressures, so not just in the water market, not just that allocation price being, a pressure on users, but we're seeing current global pressures on diesel and fertilizer, especially access to fertilizer, having significant impact across the whole agricultural spectrum. So lots of people think it's predominantly broadacre irrigators and dryland croppers who are experiencing it, but horticultural growers are experiencing those same pressures on access to fertilizer at the moment. And if dry conditions continue, and these pressures on supply of necessary inputs to agriculture continue, we may see either a reduction in crop plantings through the Goulburn Valley, or a rotation of crops to those crops that may use less fertiliser or offer a better return, and just need to have that understanding of how that change impacts on your demand for water. If dry conditions persist, those who have planted a winter crop, we may see some early season demand for water just to finish them off if those dry conditions persist. But again, that'll be dictated by availability and that allocation price. As Shani spoke about, we have still around 420 gigs sitting on private accounts at the moment. The expectation is that will get drawn down towards the end of the season, the irrigation season there, and we'll just see what water is brought in from the Murray, if any, to carry over there as well. But the expectation is there'll be around that 400 gig brought in as carryover into next year's season. So that will give a good start for those who've got it on their accounts into either using or selling. Forward demand, as Shani mentioned, we saw a big volume of forward brought into this year. We're not seeing that yet. Just the price of forwards is sort of putting a lid on that market at the moment. I think as we get further towards the end of the year and outlook becomes clearer, there will probably be a change in that market. Similarly in carryover. So we haven't seen a lot of carryover sellers come to market yet because of the dry conditions. Lots of normal sellers are still using water themselves and are still making decisions about what water they're going to carry over for next year themselves. So we expect, once the irrigation season finishes in the Goulburn Valley and people look at next year's outlook, make decisions about what they're going to do, we will see potentially more volume of carryover come to market then, and potentially even an increased demand. If allocation prices soften for the remainder of this year, we may see an increase in demand there. But as I mentioned, we've seen volume of water purchased by the Commonwealth in the Goulburn Valley increase, and this has had a flow-on effect to the carryover capacity available in that valley. Indicative opening allocation price. This is where I wish David was with us. His crystal ball is a bit better than mine. I think we're still too early in the season to give an indicative opening allocation price. I think as we get towards the end of May, keep an eye on that forward pricing if there's forwards being done, or the combination of carryover space on low and allocation pricing will give a fairly good indication of what that opening allocation price would be. If we're lucky, Eildon will cop a nice heavy storm, and we'll see an increase in available water that would also have a good impact on those opening allocation prices. So in summary, we've seen this year and we expect to see next year increased seasonal volatility. So we've seen that throughout this year, the volatility around pricing and supply in the allocation market and in the forward and carryover market. We've seen, only allocations only reaching 81% this year on hire, forecast to open at 0% if those dry conditions continue into next year. And if we continue dry through winter, spring, summer next year, allocations by February not being very high. And we will continue to see the Commonwealth recover water out of the Goulburn under EOI 1 and EOI 2, I think we can fairly expect that the volume of water recovered will increase from where it is today. So just before we come to questions and answers, just some questions we want you to think about for yourselves and your businesses and how you're operating. What are your water demands, and what's your entitlement or allocation coverage going, not just in the next season, but as Andrew mentioned, right, it's really important to think about that 27-28 season, especially if drier conditions persist through next year as well. Where are you positioned in terms of your demands and your coverage? And just as further water recovery initiatives continue and that tightens up supply in the market, will that supply reduction, how is that going to affect your requirements into the future? Well, thanks everyone, and I'll hand back over to Shani for questions now.
Thank you, John. We have got some questions in the question Q&A box. Okay, we've got one question that says, for John, what has been the historical average price for the Goulburn temporary allocation and following the completion of Commonwealth water buybacks? What price range should water users reasonably budget for under average seasonal conditions?
Yeah, thanks, Todd, for that question. I think it's fair to see. So I didn't have the number in front of me. I was going to see what percentage increase the Commonwealth ownership was in Goulburn, but I just don't have that number right in front of me at the minute. But there has been that increase in ownership by the Commonwealth, so there will be less allocation. So I think it's fair. Like, so if it is a 5 or 6% increase in ownership by the Commonwealth, probably a 5 to 10 in the short term percentage increase in average allocation pricing. But longer term, I think we will see, especially in Murray, which will flow on into Goulburn, increased allocation pricing around that permanent planting demand. The average allocation pricing in Goulburn, you've got me there. This is where we really need David, because he'd know it off the top of his head. I could tell you this year it's about, the average price weighted average price would be between sort of that 250 and 300. But I'll shoot you an email, Todd, with the long-term average price.
Thank you, John. That was a bit of a curly one there. So another question that we've been given is, I think this one's for Andrew. Mark Bailey mentioned in the Lower Murray webinar held last week, the Goulburn IVT will open early with availability of 120 to 140 gigalitres. Is the 120 to 140 gigalitre pre or post legacy and other adjustments? Andrew, have you got some insight onto that one, please?
Thanks, Shani. Yeah, it's probably before some of the legacy commitments are involved. So I think last year the opening was around 100 gigalitres or so in that sort of ballpark. So yeah, there's the allocations to the legacy entitlements, or if that's water that was traded from the Goulburn to the Murray system, that's about 100 odd gigalitres, and generally around 40 gigalitres or so of water that needs to be transferred to the Snowy system. So about 140 gigalitres of the 240 opening. So yeah, it'll be potentially around that 100 gigalitre mark or so. But so yeah, so to answer your question, Shane, it's probably there's still a little bit more of the legacy commitments in that volume that Mark mentioned.
Terrific. Thank you for that. Another question that's come forth. The below choke market is hugely dependent on the Goulburn to Murray IVT. However, since the Goulburn allocation outlook remains bleak, do you expect the demand to move water out to the Murray as strong as past seasons, or more measured to supply the demand in the Goulburn? John.
Oh, thanks, Shani, for that question. I think given that Murray opening allocation is also forecast to be pretty low, only at 17% in that dry scenario, I expect there's still to be pretty good demand for that IVT space. We may even see, given that, on the back of that lower opening allocation, there may be more below choke users who move water into the Goulburn to carry over there rather than carry it over in Murray and then bring it back. particularly with that low risk of spill on high. If that stays at 10% or below in the 15 May outlook, we may see below choke users park water on Goulburn High at that much cheaper price than what we're seeing in the Murray for low at the moment, and then try and get it back. So I think the combination of demand below choke from permanent plantings, especially low allocations in the Murray as well, obviously not as low as Goulburn, but low allocations, and just the price differential and the risk of spill I think will keep that same sort of pressure, particularly on that opening IVT balance. I think we'll see plenty of demand in that one.
Yeah, it makes sense. Thank you, John. Andrew, when do you anticipate being able to declare a low risk of spill? Has there been an instance where it's been declared at the start of July, 1st of July?
It has, yeah. In the past, some of those dry years when Eildon's been at very low levels, yeah, that low risk of spill's been below that 10% threshold. So yeah,
wow.
we'll be looking at that. Yeah, obviously at the end of June to see where that risk lies and see what inflows we get over the next couple of months. But yeah, if conditions stay dry and inflows to the storage remain low, then yeah, that declaration is likely to happen very early in the water year.
Similar perhaps to that maybe August, like we've just seen this season?
Or possibly earlier, yeah.
Yep.
Yeah, because we're lower than at Eildon, or we're heading into
And yep, of course.
Yeah.
If the dry scenario prevails in the Goulburn systems, has modelling been done, and are you able to provide any commentary on what allocations in the 27-28 water year could look like?
Yeah, that's a good question around that's where the crystal ball would be very handy. But as far if we have a dry scenario, so if we end up with seasonal determinations of 50% or above in the Goulburn next year, then the outlook for the following season will look fairly similar because we've got that early season reserve in place. In the scenarios where we don't get to 50% next year, then those outlooks for the following season will be lower because that reserve isn't in place, and we're solely reliant on what inflows we get in the following season. So that's probably as much guidance as I can give at the moment, Shani.
Yeah, your crystal ball sits where mine does, in the corner with a lot of dust on it. So thank you. But it is logical, isn't it? If we're going from one dry season to the next, the supply has to be less, doesn't it?
That's right.
Okay. Well, thank you. That seems to be all the questions that we have for the time. If anybody does have any further questions from this, don't hesitate to reach out to your brokers and we'll do our best to get back to you. Thank you to everyone that's tuned in. We hope this information has been valuable and given you some depth to make some informed decisions going forward. So thank you, John, very much for your input and stepping up at short notice in the last minute. And Andrew, your contribution has been wonderful too. So we really appreciate that you've been able to come on and share your information to all the viewers as well. So thank you all. And that will conclude today's presentation. Go forward and enjoy the rest of your day. Thank you.
Thanks, Shani. Thanks, everyone.
Thanks, everyone.